Good morning. Today is February 3rd, 2011. Beautiful Thursday morning here in New York City. This morning I'm talking about tensions flaring, and first I want to touch on what's going on over in Egypt. It was only a matter of time before the protests that were going on there turned violent, and sure enough, yesterday was that day. However, the market has a different reaction to this, as the violence is actually coming apparently from the government, the established government side. So, it's an interesting situation that's going on over there, to say the least. But I think the fears that took place last week regarding, what was going to happen with this insurrection of government opposition, okay, is now showing that while there is violence, it's actually coming from the established government. So I don't think there's a fear at this point that there's going to be any problem happening with the Suez Canal. Nevertheless, oil is trading higher this morning, up to around 91.75 a barrel. So that's going to be an interesting situation to keep an eye on, and to really see what comes out of this, because so far, the opposition, the protests have just been of a political and somewhat peaceful nature, and now that they've been greeted with violence, we're going to see if they return with violence. If they return with violence, then that could really, move the pressure up on oil prices here, as now potentially, there could be fears that something major can happen. So that's what's happening there. We've also got an ECB rate decision coming out. That's also bound to raise a little bit of tensions. The ECB is always been charged with trying to maintain a handle on inflation, and Jean-Claude Trichet, the Eurobank president, he's very committed to that. But we have to realize that we have all these countries, the PIGS nations, that are struggling with their deficits, and the higher interest rates, if they raise them, is going to make refunding more expensive for them. So we're going to have to see what happens there. But over the course of the next 2 days, there's going to be meetings over there to see how to deal with the actual deficit crisis. So this morning, just looking at the euro, you can see it topped out at about 138.25 here before selling off ahead of this meeting. Now it's coming out in just about an hour's time from now, 7:45 Eastern time. That's going to be due. Just want to show you Aussie. We're going to look real quick at the Aussie. Aussie's higher as well this morning. All right, they had their building approvals come in last night, much better than expected. They showed a increase of 8.7% versus an expectation of 1.3%. Okay, and the building approvals year over year, it actually only fell to 5%, when the expectation was that it was going to fall 13.7%. So a big move there. Next, we're going to move to the Kiwi. All right, they reported unemployment figures last night. Just want to take a look at this on a little bit longer term chart. All right, the unemployment rate spiked up to 6.8% from 6.5%. So that was a miss. That was the expectation. The change in employment was down 0.5%. All right, and there's year over year employment change showed that only 1.3% change versus 2%. So the participation rate sank a little bit, but as you can see, the Kiwi sold off here last night upon this. Now I just drawn a little Fibonacci retracement level here. Looks like we're sitting just above the 38.2 levels, right about 77.08. All right, 77 sort of acting as a little bit of support. We'll see if it maybe pulls back to the 76, 75 area before deciding what next to do. Let's take a look at the pound here real quick. Going to go back to the pound. And let's go to the 5-minute chart on the pound. All right, you can see here at 4:30 this morning, pound pushed higher. They had their PMI services index came in, which came in much better than expected, showing a reading of 54.5 versus an expected 51.3. Now, the pound has been doing quite well as of late, but as you can see here, it's sort of pulled back, and I think we're getting a little bit of a risk coming into the market here ahead of this ECB rate decision to really see what they're going to do. Now, just back to the euro, we'll look at it real quick. You can see that it looks a little bit similar. Traded higher earlier and now selling off. Okay, we had some PMI services index in Germany, all right, and in the eurozone, and those also came in a little bit better than expected. expected as well, although the retail sales figures came in much worse than expected for the Eurozone. So they declined for the month of December by 0.6%. They were expected to rise 0.5%, which pushed the year-over-year number down 0.9% versus an expected 0.2%. So we're going to get the ECB rate decision happening. Just want to show you dollar yen here real quick. Now, a little bit later this morning, we're going to get U.S. initial jobless claims. We're expecting a reading of a new 420,000 people who may have lost their jobs. All right, but tomorrow's non-farm payrolls number is really going to be the big number. And then we've also got our factory orders numbers at 10 o'clock, as well as ISM non-manufacturing numbers as well. So we'll keep an eye on the U.S. data. Bernanke speaking today somewhere. We'll just hope he says something it doesn't say something dumb. I think he's gotten past that point already. So, but you never know. I mean, sometimes he'll take the opportunity to job moan the dollar, especially if we see the dollar reverse today, maybe move a little bit higher based on what's going on in the euro. But I don't think that's going to be an issue. So we've got non-farm payrolls tomorrow, and then of course we're going to keep an eye on the situation brewing in Egypt. We've also want to see what the ECB has to say regarding inflation. I think some of the readings that have come out as of late have showed that there is a bit of inflation there. The question is, are they going to be able to raise rates and have these pigs countries with deficit problems still be able to fund themselves? So that's what we're looking at today, folks. Good trading to all.